There we are. Good morning. Welcome. Thanks for tuning in, everybody. If you're watching this on the replay, as always, we are live Monday to Friday, 8 a.m. to about 8:45. We like to kind of do the morning check-in. Gives us a chance to have a coffee together, talk about the market, talk about investing. So it'd be great to have you join on. If you can join us live, it's always good. Good group of people. We will get into the hellos and the good mornings. So if you are here tuning in live, make sure you do say hi. We've always got a good group of people that tune in on even on Monday mornings, which is sometimes hard. We ended off Friday on a good, really had a really great live stream on Friday. So thanks everybody for tuning. That was on live. It was great. It was a lot of fun. So let's carry that on, even though it is Monday today. We'll see who's here. And I see that we've got Candace here. Good morning, welcome. I saw this morning, Candace, that oil is up today, so I don't know if that's a good thing or bad thing for you, depending how you're trading, I guess. But I saw that this morning. And Stan is here. Good morning, Stan. Always good to have you. Always great. If people are watching and are new, don't be afraid to jump in and say hi. It's a good group of people here. We're not scary by any means. If you have investment questions or comments or anything like that, now's the time to ask. And Trent, good morning. Welcome. Always good to see you. Oh, I missed one there too. And Zach is here. Good morning, Zach. Always good to have you on the stream. It's awesome. Great. All the regulars are here. Probably a few more will come in. Candace, if you're watching, I have a question for you or a suggestion for your next video, because I'm confused as heck. And we can well, I won't pull it up, but if everybody kind of knows, obviously I'm doing that 1 year challenge. Started that 1 year challenge by buying Brookfield Asset Management fractional shares. So instead of subscribing to StreamYard, I'd put the $25, converted $25 US, put it in the fractional shares of Brookfield Asset Management. It's done a split. It's split off into, it's confusing to me. I got to really read into it, and that's happening today. So it's splitting into two different companies. There's going to be Brookfield, from what I've read so far, this is what makes it confusing. There's going to be Brookfield Asset Management Corp, I believe, Incorporated, and then Brookfield Management Limited. So the original shares for BAM are turning into BN. I don't know what the new one is yet. I haven't dug that deep into it yet, but I saw that kind of happening. And so I guess the question is, which one do I continue to invest in? From my understanding so far, the spinoff will pay more dividends, but I don't know. We'll see. I have to see. It's really up in the air. And there's a few articles on it, but it's obviously the first time that something like this has kind of happened to any of my shares or in stocks. So I'm learning this as we go. So if any insight, Candace, if you have maybe an idea for a video, there's one for you that might clear it, because right now I read it and it's like clear as mud on what the heck is happening. So it's not trading. It looks like, I looked at my Wealthsimple this morning. It's not trading yet. This kind of shows that it's spinning. So it must be converting over, doing its thing. I have no idea. I only had 1.1 something shares, so it's not like it's a huge thing. I'm not like I'm going to be making a fortune off any kind of spin-off or something like that, but I'm just wondering where I should be investing going forward. Continue on the same or the new one? I don't know. Anyways, so that's a question for everybody. And good morning, Jason. Coffee. Good morning. Welcome. Okay, so this helps maybe. Basically, sold the band, wait for the dust to settle, see if it turns out the way I think it will. Okay. How do you think? I guess the question is, how do you think it will turn out the way you think it will? But anyways, I don't know. I didn't have a big position in there, so it's not like if something goes completely sideways, it's not the end of the world. But I will be investing, obviously, in something going forward with that challenge, right? So ideally, it would be similar. We'll have to see. I guess the best thing, there you go, Candace. I guess we'll wait to see, wait for the dust to settle to see what happens. And I'm not making another deposit on that one until, well, beginning of January anyway. So hopefully the dust will have settled by then. We'll figure out what the heck's going on. I'm sure there'll be more articles on it online and some forums I'll check out to see what the consensus is. So that was my big news for the day. But other than that, and on the channel front, I've been playing. I had a lot of fun on the weekend, just playing around with shorts on the channel. If you obviously subscribe to the channel, you don't always get them pushed, I don't think, to you, depending on how you watch shorts. But I just know I did a few of those. They're always kind of tongue in cheek, a little bit of a meme, a little bit of tongue in cheek. So I don't take the shorts if you're following the channel, and it's definitely a way to have a little bit of fun. So there's a few more shorts up on the channel, and there was a great quote in one of the shorts, and I had to pull it because I was watching an interview with one of the interviews, not the interviews, but the annual conferences that they have it was an interview with Warren Buffett, and he made a great point on credit cards that I had to pull a little clip from to share on a short as well, because it made a lot of sense. It makes a lot of sense, and when you actually break it down and think about it, it makes a ton of sense. So go watch that. It basically talks about how Warren Buffett basically is saying, like, don't have credit card debt. We all know, we've talked about before, try and pay off your credit cards as every month, so you're not dinged at that exorbitant amount of interest. I mean, I think mine is, if I don't pay it, something like 18-19%. It's crazy what you would pay on your credit card. And even if you don't, the interesting thing, I think maybe some people don't always realize, everybody that watches here is very smart, so maybe they do, but a lot of people don't realize that when you don't pay off your full balance, you get dinged interest on the whole amount until it obviously carries over with your new balance. So even if if you pay it off short $1, you're still paying all that interest. So something to be aware of. And his point to the conversation was basically, someone was asking him hey, they had come into some money. He said not a lot of money. I mean, he says not a lot of money. Not a lot of money to him is probably a fortune to us. But anyways, he basically said to the person, said, well, if you've got X amount of dollars, let's say it's $1,000, how much do you owe on your credit card? And they had a balance of more than that. He basically said, put that $1,000 onto your credit card. He's like, I can't make 18%. So if you think about it that way, I think try and pay off your credit cards as much as possible if you have them. If people are watching, or any kind of debt for that matter. I mean, there's good debt, bad debt, but the way that the interest rates are going too, back when a line of credit or something like that was reasonable, now obviously it's jumped up quite a bit too. So be aware of that, I think, going forward. So I think part of the New Year's resolution, if you have debt, maybe look at that going forward to the New Year's. And on New Year's resolutions, I had a busy weekend. I did another video on kind of a New Year's resolutions for beginner investors. I noticed on my YouTube, I have a lot of people searching for like beginner investor type things. So I'm trying to roll out slowly but surely, is build a playlist for beginner investors. These live streams will be part of that playlist. People can go, because we are, there's a lot of beginners. I'm a beginner. I've only been doing this a couple of years now, almost 2 years, learning a lot. And I think these live streams would be a good place for beginners to kind of come on and ask questions and not be intimidated, because you can't know everything. Nobody knows everything, and we can put our minds together and help each other out, which we have been doing. So I think that's good. But I'm going to be trying to put up slowly but surely, just putting up more kind of basic videos. They might not be for everybody, but people, according to the analytics, people are searching for kind of beginner type investment information. So I'm going to be having more of that on there. So one was basically a New Year's resolution, is just to kind of start investing, and how to start off, how to start slow. Do your research. You can watch the video. That'd be great if you could go watch it. And if you know anybody that is, maybe even a younger person that's thinking about starting to invest, pass the videos along. Might help them out. Good morning, Nadia. Welcome to the Happy Monday. Happy Monday. Feels like a Monday today though, but it's getting like, when I wake up this morning, it's like, holy, it's almost Christmas. It's crazy. This after this, I think, week, Christmas is basically here, so it happens so fast. But we'll keep the live streams going. We're going to do live streams at least for this week. We'll see how the audience kind of carries through for the following, because I know everybody gets into that Christmas mode where they're out, they're shopping, they're maybe on vacation. So, but we'll carry it through, and we'll carry on until Christmas time. It's fun to kind of get in. Maybe Santa will have that rally after all. I don't know. Fingers crossed. We'll see what happens. Big week this week, right? With what will be happening in the markets. I know from watching Candace's live stream yesterday, she did bring this up a little bit, but it's worth talking about. Is Fed in the States has their big meetings this week. So tomorrow will be CPI, and we'll see what's happening with their inflation tomorrow. So we'll be able to talk about that on the live stream tomorrow. That should be always interesting to see what's going to happen. And then on Wednesday is the Fed's rate announcement, much like Bank of Canada did last week. So this week coming up is the Fed's turn. So I think all signs are kind of pointing to 0.5%. From what I've been reading, what I've seen other people predicting. So we'll maybe throw a little poll up on the community tab later on, but I think it's kind of, let me know if people are watching, let me know in the comments what you're thinking of what's going to happen with the Fed. Probably I'm guessing 50, much like the Bank of Canada did, but leave a comment. And it is a busy week. So I'm sure for lack of news today, Candace, I think we'll make up for it for tomorrow and the next day, just to see what happens. It's always interesting. What I find really interesting with the market, though. I don't want to say you become numb with the news or anything like that, but you as you read it more and more daily, and you get more kind of involved in investing. And I think maybe I do it a bit more, obviously, because I have a YouTube channel, and I'm watching maybe some news and reading a lot more maybe than the average person. I think a lot of people that are watching the streams are reading a lot of it too. But you almost just kind of learn to roll with it. You take the lumps when you get them, and you just for me anyways, you keep moving. You try and keep moving forward, and that's how I kind of see it now. It's definitely going to be an interesting week, though. So we'll see. It'll be interesting, as always, with their more so what we're expecting the rates, right? We're expecting the rate to go up, but it's always their wording. Bank of Canada's kind of signaled that the rate increases are going to slow. So it'll be interesting to see if the Fed has the same kind of wording and thoughts as they. It's not so much what they throw out there, it's what you can read between the lines, and that's how the market will probably react. So that's on that. And Train, yes, they are going up. Yeah, I mean, all for all intents and purposes, they are going up tomorrow. Sorry, not tomorrow. Wednesday. So we'll see how that. We'll see what happens. We'll really just have to see what happens. But I think the market always seems to be one step ahead of everything, and prices everything in. I can't predict anything, but I think probably I'm kind of leaning more towards a bit of a slowdown in the States too. But we'll have to see how they say. The one thing with Canada, Terrain, I did actually have a couple articles we can kind of share here, and this should be interesting. I don't know what. Let me share my screen. That would help, so you can actually see. And I don't know what time this is happening today. Maybe if someone can pop into the comments. But everybody's favorite Bank of Canada Governor Tiff Macklem is making a year-end speech today. He's doing. This article doesn't say anything in regards to the topic of what he's talking about. Obviously, it looks like probably just like a year, kind of a year in review thing. He's doing a speaking engagement. It's in Vancouver. It's hosted by the Business Council of British Columbia. So that will be kind of maybe some interesting little tidbits come out of that. But this article is very short. It just tells that it's basically he's speaking today. It doesn't mention a time. But it does say, well, this is what kind of hits home too, because it's been since March, the Bank of Canada has increased rates 7 consecutive times. And now the rate obviously is the highest it's been since January 2008. So that's a long time ago that we've had such a long period of low rates that it's interesting times. So we'll see what happens. Obviously, next bank we get a bit of a break with the Bank of Canada until January. January with rates and stuff. So we'll see we'll have to definitely see what happens by then going forward. So that's happening today. There might be some more news. Obviously, will come up and pop up with what he said there. Probably not a lot that we haven't heard already from that one. And I had one more article. And we'll share it for everybody here. Yeah, let's pull that up. There we go. So Twitter is relaunching their $8 subscriber fee this week, and they're doing something interesting with it. Is they launched it. It's probably about a month ago now. It was shortly after Elon bought Twitter. They started to do the subscription service to be able to buy that verified little check mark. But what happened shortly after they released it is there was a lot of the check marks used to only be for companies, celebrities, governments, and certain verified journalists. They opened it up for anybody to be able to pay $8 a month, but it was kind of inundated with imposter accounts, making verified accounts to make it look like other companies. And there was actually one. It was a pharmaceutical company, and they a fake kind of verified account was set up for them, and they tweeted something about I think it was about, if I'm not mistaken, was it insulin? I could be wrong. It was but it was a pharmaceutical company basically, and whatever they tweeted caused their stock to drop like big time. So they had to basically what Twitter had to do was cancel everybody from being able to verify until they worked out a way to prevent things from like that happening. From what I understand now, they're going to be relaunching it, and I think they have to do a manual check of some kind to make sure you're actually the person or entity that you're verifying one time before you do that, before they'll give you that blue check mark. Now, that being said, I don't really plan on, I am on Twitter. I don't see right now, I don't see the value of paying $8 a month to do that. The real interesting thing though that I found on this is they're relaunching this service. They're launching it so far for iOS, so Apple system, and on the web. The Android, I use Android. I guess I can't sign up anyways through Android right yet. I guess they haven't done that update yet. But the interesting thing they're doing with iOS is because Apple always takes a cut of any kind of revenue from apps in the App Store, and I think it's around 30%. So what they're actually doing is Twitter is making it so if you sign up through their website, it'll cost you $8. If you sign up through through the app on iOS, it'll cost you $11 a month. So they're basically trying to force people off of the app, to register for the stuff, to take that cut of revenue away from Apple. And there's a few companies I think that are starting to kind of do that. I don't think Apple really likes that, but it's I guess for businesses, right? If you're taking a 30% cut on revenue for something that's in an app store, you want that on your bottom line. So if you have a good following for certain things and other way for people to do it, then might as well try, So we'll see. There'll obviously be there was a bit of back and forth and conflict with whether Apple was going to be removing their app from the App Store. They've come across and said, no, we're not, but who knows what will happen. But I found that part interesting. So if you were thinking of signing up for Twitter Blue, I think they're still calling it Blue, and you have an Apple device, go to the web and do it. You'll save yourself $3. I don't know what the cost is going to be in Canada yet. That's $8 US or $8 on the web, or $11 on iOS. That's US dollars. So they'll probably be obviously converted to Canadian as double the way the US dollar is going on that one. But I did find that one interesting, how they are doing that different direction of making some revenue, and maybe Twitter will start making some. Maybe they'll start making some money. I don't know. So other than that, going forward on a portfolio, no new purchases for me other than purchasing when the dividends came in last week, redoing a few little small fractional purchases. But if anybody's bought anything, let me know. Now I know Candace, if you're watching, I heard on Candace's live stream, for those that are interested, she's going to be doing her portfolio reveal again, which will be always interesting. I would like that one. It's always interesting to hear what Candace is and to find out what other people are invested in, to kind of go behind the curtain, so to speak. And I'm looking forward to that video. I haven't done an update on my portfolio. I did an update on the weekend for the venture fund because there was a dividend that came through, and it's that one's been doing okay. The venture fund is, because it was put into US dollars. It's funny, I kind of got that at the right time because it was just before the US dollar started to take off. So it's doing okay, actually, sitting in US cash. Now it's the first investments, from what I understand, from what it tells me in the app anyways, are going to be started to go out in January of 2023. So that will obviously be some fluctuations. It'll be interesting to see how they're going to display this in the app. I have no idea, but I'll obviously share that in there. But it's been doing okay. It's up like about 8% just with the US dollar, and the dividends that come in on that, the interest, like the dividend that gets paid on the US fund, is quite nice, actually. I'm usually getting about 1850 or so a month, which is pretty good for the amount that I have invested in there. So I've been happy about that. It's just sitting in cash right now. That's not too bad. And I've also been, I'll sort it out, I think, in the new year, because I've been looking more at we talked about it last week, the Purpose Canadian High Interest ETF. I think that's the name. They've changed names and certain things, but that's one carrying forward. And I'm going to be I'm going to start to move over my some cash that I have, kind of sitting in an emergency fund, into my TFSA. Don't ask me why I don't have it in anything else. Anyways, it's just sitting in a regular savings account. So I want to slowly kind of move some of that over. I think I'm going to put it into the Purpose ETF, the Canadian ETF. It's paying a pretty good dividend every month. I don't expect to have to touch that money, but I'm going to wait till the new year to kind of do that. That's my kind of time when I get everything, kind of look at everything and go forward from there. So that's when I'll start to kind of rejig that. So you might see kind of some changes in the TFSA in terms of amounts, but anyways, that's my plan for the new year. Just because it's just sitting in some interest accounts right now, and it's only making, I think, 1.5%. So I can more than double that. I think I might as well kind of make a bit more on it. And Candace's video is up. There you go. So after this live stream, don't go now. You can head over to Candace's channel, check out. I'm going to watch that after this, Candace. Yeah, that's always interesting. It's always your portfolio, or your portfolio stuff is your portfolio are always kind of interesting to check out. Yeah, it's always, there we go. And then also in January, it's always like planning ahead here. In January, I will start the automatic. I'm going to start the automatic deposit into my TFSA as well. And probably I've decided, I think it's going to be VDY on that one. I'll do a weekly deposit of that. So it should give me, I want to try and do, I got to work on the budget and everything else. This is the time of year. I'll probably put in $50 a week into VDY. And then that will give me just over one share. So dollar cost average, I like the monthly dividends on that one. So that's kind of those are my goals for the new year. I don't know if anybody else has any other kind of investing goals. It's funny how this time of year makes you kind of think about what's coming up in the future and everything else, and how you want to, tackle the new year. I guess it's still rough out there, right? Everything's expensive. You go get groceries and you're just like, holy cow, everything's just costing more money. But just trying to be really diligent and try and still save along the way. And also, I still have a ton of room in my TFSA, so just trying to do as much as I can to try and build that up. That's the goal. That's the goal of the channel. So we'll see how I think the new year. I'm pretty happy with, obviously, the market this year down, or my investments are down, but just carrying through, keep building, not just keep building, and slowly but surely. I think hopefully, I think 2023. I mean, all signs are every sign is pointing towards recession, but I don't think that's necessarily time to stop investing. But because I think when we come out of that, we'll come out stronger. So that's kind of my. I want to try and do the best I can to try and build that base up. So when the market does eventually turn around and gives us some decent green, I'll be in a good position, and hopefully other people will be too, with what they're planning with their things. So like to remain always like to remain optimistic. And I guess on that note of saving, I had one last article, which is I try to find good news, but this kind of goes back to our talking about Warren Buffett and credit cards and loans and debt. So the third quarter debt income ratio statistic from Stats Canada came out, and it's up. So Canadians, basically, it increased to 183.3% from 182.6% in the second quarter. So Canadians, basically what it works out to is $1.83 in credit market debt for every dollar of household disposable income in the third quarter of 2022. That's kind of scary when you actually look at that. Households disposable income gained 0.8% per quarter, but the household credit market debt rose 1.2%. That's kind of scary when you break it down. The whole numbers, the total amount of household debt in Canada includes consumer credit, mortgage, and non-mortgage loans, grew by 1.2% and reached nearly 2.8 trillion in the third quarter. 2.07 trillion of that is mortgage debt, and non-mortgage loans and debt 722.6 billion, which is a crazy number when you look at that, of the amount that people owe. I know from mortgages, we've talked about mortgages before, with obviously people, the last with the housing being so expensive, and the amount of debt that people took on to get mortgages is just like mind blowing, and we see a lot in the news about. And yeah, you see that. Well, what's the company that's doing really well? Like really well, you can see is Pay As You Go. Is not Pay As You Go. It's Go Easy has had like records, and that's like a low small loans, that kind of thing. And they're not, I shouldn't say not small, but like, and they do like payday, not payday loans, but they do like that thing. It's kind of like Pay As You Go kind of idea. They'll do loans on household, different things and that kind of stuff. I think they have another division that does like loans on housewares and household stuff and that kind of thing. It's crazy, but we're seeing it, Candice. We're seeing it in all the other numbers, like credit, like the report last month from when we talked about Equifax reporting, like credit card usage is up as well. It's like people are keeping their standards of what they expect to live on up by topping it up with debt to keep that standard. And it was, yeah, I think it hasn't maybe you go to it's interesting though because there's talk of, I mean, obviously rates are high, right? Mortgages are costing more money, credit cards, everything costs more money, a car loan costs more money, whatever, every time you borrow money is more expensive. But then you go to you go to the grocery, everything's more expensive, right? You go to the grocery store, everything is more expensive, produce, what have you. But it's like I always see people, I always see, not that I'm trying to tell anybody how to spend their money. It's not my business. But like when you see people, a big thing is like when you see people, somebody's on social media and stuff, they take a picture of something, right? And they're like, I can't believe this costs $10, whatever, right? It costs X amount now. And it's like when you look at it, I just kind of think to myself, do you really need that? Is there something else you could get instead that costs less money? Or, it's kind of crazy. I mean, what I saw was someone, it was, they were tweeting about it, was they were complaining about the price. I forget, it was like, I forget what the price was, but complaining about it. And it was a bottle of that like Starbucks coffee sweetener that you can buy, the flavor, the sweet, that you put in your coffee. And it's like, instead of buying that, why not just buy a bag of sugar? It's like, it's half the price. It'll last you way longer, and you'll save some money. I don't know. I'm just maybe really overly frugal when I go to grocery stores, and I don't buy really anything pre-done. I cook at home. I don't go to like, because there's ways to do it, because I want to try and get that hopefully into my TFSA, the savings. I mean, but yeah, it's just kind of interesting. So people, because you see people wheeling their carts out, they're not making any changes. They're just kind of taking the hit of paying more money. And obviously with these debt numbers, coming out, people are putting it on credit and not, kick the can down the road and worry about it later. But it's crazy. It's crazy when you think about it. And I mean, the mortgage thing is the big one, because in the news with the mortgage stuff, Julius, and welcome. Thanks for tuning in. It's like with people's variable rates have gone way up. Yeah, I think you're right. Like, I kind of think I have this conversation a lot with my friend Rob, and he's been on the stream. We should be back again for a frugal episode, because we're both I think very frugal. He lives in the other side of the country. He's in Ontario. I'm in BC, but we talk on the phone. We talk a lot about that. And our parents are both immigrants to Canada. They're both, both our parents lived through the war. Came to Canada after the war from Europe. And you hear I don't know, you hear stories like my age, when I hear stories from my parents, and I see things from history that they've taught me. I remember talking to my mom about, with groceries and stuff, you're complaining about, the price of eggs or whatever. And she would talk about how during the war they would only get like 2 eggs a week, and so I think there's ways that we can definitely live more frugally, and still be fine, right? I don't think it's a bad thing to be frugal. I think, we can talk about with what Candace was talking about with like go easy and taking loans on, like going to a store and pay as you go to buy something in the store. Like, there's probably other ways. It might be a little bit more work, but there's probably other ways to find things that are cheaper. If you need a sofa, don't take a loan for a sofa or put on your credit card. Sit on the floor, or save your money, or look on, there's different marketplaces. There's online, people will probably giving away certain things when they get new ones. So look for things that are used. You don't need the latest and greatest to, especially, I think especially right now, I think it's, lately too, I think I may be extra frugal, but I don't think there's anything wrong with that. I always say, like, I'm frugal with what I buy. Like, my biggest really monthly expense, obviously shelter cost is expensive, and electricity and heat, and then food, right? And food is such a big expense, but like you can be frugal with it, but still eat very, very good. It's just a matter of looking at what you buy. A friend of mine was out they went out, they had a gift card for a movie that they had been given at Christmas in 2019. So obviously 2020, what happened with movie theaters, they all closed. So they just never used the gift card. So they finally thought, okay, there's a movie, we're going to go to the movie, family, and let's go make a night of it, whatever. So we have the gift card, covers the movie. They went out to, I forget what fast food place it was. I can't remember. It wasn't McDonald's, but it was whatever, a burger place. And he called me. He's like, guess how much does it cost me to go out for fast food? And they had like family of 4, had like burger. I think they shared 2 fries because they're frugal, right? They're shared. And then they don't have, the family, they don't drink pop. So they just had water, which obviously they would just pay for the cup or they got it for free. And they had, I think, a couple Sundays for the kids. And it was like $60 something. And I was like fell off my chair because I haven't gone out for like fast food really for so long. And it's like, because I mean, sure, groceries are expensive, but you can buy a fair bit of groceries for $65. So that's how I look at it, Julius. Just be more frugal, buy fill your fridge instead of going to trying fast food and going out for dinner. It's too expensive. It's too expensive. You can easily go out and spend $100 on dinner for 2, and then you realize why you have no money at the end of the month. I'd prefer to put $100 into, I don't know, even into Bitcoin. If we're talking about something, because it's if as soon as that dinner's gone, instead have a date night at home and cook a nice dinner for half the price. Anyways, that's a great one. I'm just, super. I get it from my mom, I think, Julius. My mom's Scottish, so maybe that's what it is. But we've always been kind of frugal with stuff. And you learn, I think you learn from your 20s being, when you look back on how much money you wasted at where you could be today. By the time you're in your 40s, you're like, I should have been better at certain things. But such is life as we go. But we should have a frugal live stream on the live. Have my friend on to talk about how, I guess maybe it's just age. I don't know what maybe changes people to be more frugal. I don't know. Upbringing maybe. Yeah, it's interesting, but I don't think it's a bad time to save money with what we're not to sound doom and gloom with the economy or anything like that, but I mean, my dad lived, back in the 90s, he was laid off his job, and it was tough for a little while. So you always want to make sure that you have obviously a bit of savings, and try. I guess the big thing is, especially when rates keep going up, is try your best just to cut down as much debt as possible if you're able to. And sometimes that might mean not investing, because if your debt's higher than what you're making on the market, it's simple math, right? And try and work to do that, and not taking on. I don't think taking on new things. We're seeing that though. I think some people are. We're seeing as car sales have gone down. We're seeing inflation come down. I guess obviously not as fast as the banks want it to, but we'll see. Again, back tomorrow with the numbers in the States, we'll see what happens. Everybody was sitting on a lot of savings from back the last 2 years, so I think that's just slowly getting eaten away. So it's eventually going to hit people, and then it might be a big slowdown. Does it turn negative? Who knows? There we go. So let's just take a look and see how the market doing today. We're kind of up and down. I think we're going to have kind of a bit of a bumpy little bit until the Fed kind of actually puts out what they're planning on doing. I haven't. We'll have to definitely see what. It'd be interesting week coming up. So I'm looking forward to that. So thanks everybody for watching. It's always good to have everybody tuning in. If we get to the end, it's not the end. I shouldn't say it's the end. I don't want people to turn off, but we're getting close to the end here. So if anybody has any questions about my portfolio or about anything in particular, throw them down in the comments. I'd be more than happy to try and answer, or maybe there's someone here that can help us out and answer it. So if anybody's thinking about buying something this week, and it's your forum as much as mine. I could ramble for forever, but it's everybody's forum. And that is a very good comment. Yeah, if it's, and I think it will be a bit. It was a bit better than expected last time, right? We had a bit of a bump. So will this be? I mean, I'm always the optimist, right? Is tomorrow? Sorry, Wednesday. Is Wednesday maybe, Candace? Maybe the start of the Santa rally. After all, I don't know. We'll have to see if that's the case. That would be nice. We didn't really have one last year. But we'll have to see. Sorry, CPI. Yeah, sorry. What am I saying? CPI tomorrow. Interest rates on Wednesday. Wednesday is a given, right? It's just the wording, but we'll see. The CPI comes out really early tomorrow. Well, early for me, not so much for the back east folk. But by the time I kind of wake up, I'll be able to see what's happening. And I think it will be. It's coming down, right? It's just not coming down as quickly as everybody's hoping. So we will have to see. I think I haven't even looked to see what kind of the prediction. You can always look at what the predictions are and that kind of stuff, but I haven't really. Did we had a little bit? Yeah, I guess we did. Yeah, didn't seem like it. I'm expecting like, but no, we didn't. We'll have to see. We'll see with this year. Nothing too much in mind. Was it that much? See, last year I wasn't as much into with the I just started this last year really building up in the S&P. So I should see a bit of a, if we get a rally again this year, I'll see a bit more. I had kind of just started. That's the thing with, I think by December, I was only investing for 6 months. So it kind of didn't really necessarily show much of a, I'd have to go back and look, but yeah, I remember kind of not having a ton. I'd have to look back and see. That's the one good thing about putting everything on YouTube. You can actually go back to the dates and kind of see where things were. And maybe how soon I forget. Maybe I'm thinking that, Candace, because this year's been so terrible that I'm like, I'm just lumping it all in to everything. But there's your numbers for people. So we did. TSX was 5.3 over the same time period, and S&P was up 4.9 between December 20th and January 4th. So there we go. So everybody would have sold off for their tax losses by then, right? That's what I guess is the start of it. Get it in before the end of the year, and then purchase at the start, kind of thing, for certain things, I guess. I'll have to look back now. Now you say that, I'll have to look back at what my portfolio was doing back in December 20th, and see, and pull that up. Interesting. Okay, so we'll get another one this year, maybe. Hopefully, it'd be nice. It's just nice to have green days over red, but I don't know. Then you look at red. Then you look at the red days, and you think you wish you had more money. It's never enough. Never enough. And especially now, everything seems to be going to other places that you don't want to. There's always these unexpected things. It's never. There's always like some extra bill that comes along that you weren't expecting for something, and it always throws a kink in wanting to put extra funds in your TFSA. So there we go. 8:45. Thanks everybody for tuning in. It's so good that take your time on a Monday to join us. So we will be back tomorrow, 8:00. I'll be back on. Tomorrow's the big day, and Wednesday's the big day. So that should be fun. We'll have lots to talk about tomorrow for the rest of your day. Hopefully you have a good Monday. I'm gonna make another cup of coffee, start my day. My day starts at 9 for work. So hopefully the market is good to us today. That's it. We'll tune off and we'll catch everybody. Oh, I should say it once. I keep forgetting. Don't forget, before you do say goodbye, is hit that like button on the way out. It really helps the channel. So thanks so much, everybody. Let's end with some fire. Sit by the relaxing fireplace to end the day and roll into our day. See you tomorrow.